Hello, everyone. Hope you all are doing well. It is Wednesday, and we're back to our normal schedule, which of course means that we're back to NetSuite. So we've got NetSuite for the next 4 Wednesdays. Just a little bit of background of what we're going to be doing today. So first of all, probably goes without saying, log into NetSuite, okay, if you've not done so already. But a little bit of context for those of you who are for those of you who want to know what we're going to be doing moving forward. We have talked about the basics of NetSuite from to start with, and what it is that we need to know to manipulate at a very basic level. We're going to be walking through the purchasing and revenue process transactions over the next few weeks. So I'm going to be alluding a lot back to what we talked about in chapter 5 and 6, some of the concepts we referred to there, and reiterating those as we walk through our questions here. It's important, again, to take notes as we're going through this, not just for the process, but if I stop and talk about something and say, what is the purpose of doing this particular step? You need to understand not only what is the step that we're doing, but how does it relate to what we talked about back in chapters 5 and 6 of the purchase revenue process. We're starting today with purchasing, and there's a very simple reason why we're doing purchasing first instead of revenues, is that we need to actually buy something so that we can eventually sell it. This is a retail company that we're going to be setting up here. So we're going to go ahead and we're going to buy something over the next 2 weeks, go through that process, and then once we actually get once we actually buy it, we're going to get it set up so we can sell it here in the near future. So let's go ahead and let's get into NetSuite, and we're going to start by creating an inventory item. Now I want to start by saying that I'm going to give you a very, very cheesy item that you're going to sell. You can sell whatever you like. If you're just kind of like, you know what, Dr. Burns, I'm sorry, I'm with you on your general level of humor, but this is too much, okay? You can go ahead and create whatever inventory item you want to sell. That's perfectly fine. I just like to do something that's memorable. It's very, very easy to pick up. So let's go ahead and let's get started here. We're going to go ahead and we're going to start out with going to lists. We're going to accounting. And we're going to go to items. So lists, accounting, and items. And like I said, please make sure you're taking notes on what the paths that we're following here, because possible it could ask you questions about what the pathways are. So as you're going through these, take notes electronically, by hand, whatever it is, so we know these paths. It's also important to note if you actually we have to review something or hear something, we know what the path we're going on. And again, we're going to be using this recent records over here on this side. We're going to be using this quite a lot. So lists, accounting, and items. Oops. Got a little bit too carried away. This is accounting items. Go ahead and click on items. And you'll notice we've got a whole bunch of different items here. Most of these are inventory items listed for sale. We're just going to create a new item because, like I said, that's what we're going to do. So where it says that blue button, click on new item. And there's different types of items that we can actually list here. Some of these are not for sale. Some of these are non-inventory items. Some of these are specialized items. We're going to create an inventory item because, again, we want to buy something that we can eventually sell. So where it says inventory item, the third line down, click on that. And then wait for a little bit, because that's what we do here. We wait for NetSuite to process. And we listen to Dr. Barnes ramble incessantly on because he's trying to wait till we can actually get to the screen, okay? I didn't prepare anything for this part. This is all off the top of my head right now, guys, all right? Okay, so we're going to create items. So the very first thing I would like for you to do, this is the most important step, because if we don't follow this step right here, what I'm about to do, the next few steps will not make any sense, okay? So down here where it says form, it says inventory form, we're going to change this form. And there's only 2 types. There's inventory and there's standard inventory part form. So you can probably guess if we're changing it, we're going to move to standard inventory part form. Go ahead and click on that. And what you're going to notice is after it gets done processing, our interface, our display is going to look a lot different. So it's processing here, and now we have a different form that we're going to be using. Now, again, if you did not change that form, your interface is going to look different. It's not going to make any sense about what we're about to do. So make sure you've got that change and got that input there. We are going to create a new product. And like I said, this is a very cheesy product. You can use something completely different, but if you're with me, you're with me 100% on this one, okay? So here's what we're going to be doing. We're going to make a textbook. It's called I Love AIS, because let's be honest, everybody in this room loves AIS. Or has certain strong feelings about AIS. Maybe not the word love is what I'd use. If you want to put hate AIS, I guess that's okay. Keep in mind that I will be looking at this, so I will know who you are. All right. So, but I love AIS textbook. Okay, so we're creating a textbook that we're eventually going to sell. Now, the few things that we need to note, we need to set up some things. We don't need to really do anything else up here other than set the item name because this is a required field. But we do want to change our parent company because remember, back before we took break, all of our stuff was set up to go through parent company United States West. Remember, our warehouse is in San Francisco, so we want to change that to parent company United States West. You're asking if you fail to change that parent company, will it make a big deal? The answer is yes. Everything we're going to be doing is going to be flowing out of that US West warehouse. So when we have the opportunity to specify a parent company, we need to say it's going to be our subsidiary, which is US West. Okay. So now we're going to be making some manipulation. We're adding some information down here. There is a very specific sequence to what I'm going to be doing. If you take it out of sequence, some of these things may not work because we do have to specify some information in others. The first one's pretty basic. In the purchase description, we're just going to provide a lengthy description of what it is we're doing. So I'm going to say this is the I love AIS, and then I'm going to say the memoirs of a Truman State business student. Let's be honest, when you look back on your career at Truman's, when you all are millionaires or even billionaires, you're going to be kind of like, when did I really fall in love with business? It's the moment I sat down in that computer lab in 1420 and started working in NetSuite. Okay, that's where it's all going to take place right there. I'm going to hold you to that. I'm going to actually just copy this because we're going to use this again, but I'm just going to copy and leave that there. But we're going to be putting that description in again for whatever reason. And on the purchase price, what I'd like you to do is I'd like you to put $14.99 for the purchase price. So this is what we would purchase it at. This is not our sales price. We're going to specify that somewhere else here in just a second. All right. So got our purchase description, got our purchase price. We're going to move down, scroll all the way down to the bottom where it says the locations tab. You will notice that there's a lot of different locations here, but we need to specify a preferred warehouse. So let's go ahead and do that. Drop down, and we're going to select US1, which again, US1 is our subsidiary West warehouse. That means that we're going to be getting shipments sent to there. Now, this is important to do now because what we're about to do, the next few steps will not work unless we specify the warehouse already. We have to actually specify the location. So make sure we get that done. We're going to scroll back up. And let's see. Oops, am I in the wrong? So maybe I'm wrong. Hold on just a second. Oh, yeah, we have to stay down here. My apologies. We're at the warehouses. Down here, we're setting warehouses. We're going to specify a vendor now. Now, this is a really important step. Could we use any vendor? The answer is technically yes. Okay, we could use any vendor, but I want to make it easy for us because we want to use vendors that are actually out of the West section of the United States. That'll make things a lot easier. If you don't use things that ship to our normal subsidiary, we have to actually go through a lot of hoops. Some of those are really challenging features. So we're going to use a very specific vendor. I would like you to type in planning or type in the word plan, and you will notice that Planning Partners LLC comes up as the first one. And we're going to select that as our vendor. You'll notice they immediately pop up as being out of subsidiary for United States West, which is what we're looking for. We want to actually ship to that. Over here at preferred, you'll notice there's nothing listed over here, but if you click on it one time, a box will appear. I would like you to go ahead and click that box in. This is going to be our preferred vendor for this particular item. So when we purchase this item, we're going to be purchasing from this specific vendor. So again, you should have Planning Partners LLC, subsidiary United States West, and it should have that preferred check mark box. Go ahead and click on add. All right, now we're at to the point where we can move back up where we want to look up there. So let's go ahead and scroll back up. And I want to go to the sales pricing tab here, which is about midway through the screen down here. So the sales pricing. For a sales description, remember I said I wanted to copy that description from purchase. I'm going to use the exact same sales description here. So just Control V that in, paste it in, whichever you prefer. I also want to add my base price. This is going to be, I'd specify what's going to be at the sales. So in this first box over here where it says next to base price, I'd like you to type in $29.99. So remember, we've already specified our purchase price. That's what we buy it from our vendor from. This is going to be specifying what we sell it at under normal conditions. We buy it for $15, we sell it for $30. It will also give us certain conditions, like if we have a not-profit customer, they do a discount. You got somebody who's trying to buy all of our stock so they can resell it for themselves, a corporate raider. Well, we jack up the price by 35% because that's what you do. All right. So $29.99 is listed there. All right, going back up, we're going to go next to the accounting subtab. Now, this is really important because if we don't get the, I know I've said that a lot. This is really important. I'm going to continue saying that because everything's really important. But this is probably the most important thing we're going to do on this tab right here, simply because we need to specify where the accounts are going to, or the transaction is going to flow. Basically, as we walk through this process, we're going to be creating transactions, and these transactions are going to post to our accounting records. But unless we specify where they're going to go, it doesn't know where to go. So we need to actually tell it, what are the cost of goods sold accounts? What are the asset accounts? And if there's any other accounts we need to specify. So we only really need to specify two, which is kind of nice. We need to actually specify the asset account and the cost of goods sold account and the asset account. So I'd like to type in 5010. It's going to be cost of goods sold, cost of sales. That's where our cost of goods sold are going to go. Then in the asset account, I'd like you to type in 1200, which is going to be inventories. And that makes sense, okay? Think about what happens on a sales transaction whenever you actually engage in a sale of inventory, all right? You actually have to create the sales transaction, which is our accounts receivable and our sales revenue, which is already specified. Then we need to actually record the cost of sales, which is telling where's the cost of sales going to come out of. This is going to be the account where that cost of sales expense gets recorded. And this is where we remove the inventories because this is where it's going to be reported to. So all these items need to be specified in order for transactions to take place. I'd also like to ignore the effect of taxes. I was going to do this anyway, but hearing some of my students up here talking about the concerns with tax recently, you know, I'm just gonna, for you guys, we're going to avoid taxes. Okay, we're going to avoid taxes. So where it says tax schedule, all right, we're going to do non-taxable. So we don't have to worry about taxes for the time being. Now, we would do this normally. No, that's a bad business practice to get into. If you don't pay taxes, generally, you're going to not be in business for a very long time. But for simplicity purposes, we're just going to make this non-taxable. All right. So we've entered everything in our purchase inventory, our sales pricing, our accounting. All right. Going back up, we got the AI's textbook. We've got our parent company listed in. Click on save. And the good news is we now have an inventory item that we can buy, which is going to be our task for today. We're not going to go through the entire purchasing process. That's why we've got 2 weeks dedicated to it. But we do have something we're going to buy that we've got set up. So we're going to do that. However, I would like to check something first. And it's not going to make a lot of sense in the context we have it right now. It will make a lot of sense once I talk a little bit about it. So one of the things that we need to know is we need to know that our purchasing process is going to work as intended. All right. So remember purchasing, we talked this back this in chapter 6. Purchasing starts out with a request from a department. Then we issue a purchase order. That purchase order gets sent to our vendor. The vendor fulfills the order by sending the goods to us. Once they've actually sent the goods, then they can actually bill us, and we have to pay that invoice. So we want all of those steps in the process to meet a certain criteria, so that the next step or first step follows next step follows the previous step. Now, one thing that's important to note is in the large organizations, they may have businesses that they do transactions with continuously on a daily basis, if not many times on a daily basis. So they may not wait for the next transaction step before they move on to or for the previous transaction step to complete before they move on to the next transaction step. So we can actually set that up in our preferences if we would just want it to flow whenever the sequence goes ahead. In this scenario, we want to actually set up a control that says we do not move on to the next step until the previous step has been completed. So here's what I'd like for you to do. We're going to go to Setup, Accounting, Accounting Preferences. Setup, Accounting, Accounting Preferences. You can go and click on that. I'm going to leave it up here for people to catch up. Now, before we get too much a note here, we are likely not going to make any changes here. I say likely because if I say absolutely not make any changes here, somebody's going to say, Dr. Barnes, what you have on my screen, or I have on my screen doesn't match yours. So it's almost likely, almost 100% likely we're not going to make changes here. But we still need to check this because if it's different for what I have and what you have, it's really important that we make this change. So we're going to our accounting preferences, and this is going to list us some areas where we can actually make default changes. We're going to click on order management. By the way, this is not the only time that we're going to see order management. We're going to see order management a couple of times throughout these processes, but this is the first of these. What I'd like you to do is scroll down until you find receiving. So we're doing one primary step, one primary check here is that we're going to look at this first box under receiving. And where it says bill in advance or receipt. And I want you to make sure that this box does not have a check mark in it. That should be the default for everyone. It should not have a check mark in it. Now you're saying, why are we messing with this, Dr. Barnes? It doesn't have a check mark. We don't. So the first, it's important that we check this. Why do I actually check this? Because in previous versions of NetSuite that I used to operate in, it had this box checked. What does that mean right here? If this box is checked, what does that represent? It's basically saying to suppliers who are interacting with the NetSuite system, we have not yet received goods from you, yet you are allowed to go ahead and send us a bill. Does everybody see a problem with that? So let's say that you are working. You're working in the real world, and you order from a vendor, and the vendor sends you a bill without actually sending you any goods. Is it possible that your organization could pay that bill, and then the vendor says, "Oh, sweet, I've already got the money. I don't have to send anything out"? Yes, that's certainly problematic, and that's a risk that we run as a business if we actually have this box checked, that they could bill us, we could pay it without actually ever receiving the goods. Generally speaking, not a good business practice to pay for goods that we don't receive, okay? So this box ensures that they will not be able to send an invoice to us until we've actually received goods from the vendor. So actually making sure that box is not checked. So clarify, this box should not be checked for, I think, everybody in this room. It was probably not checked, okay? Again, I'm not 100% certain. If somebody in this room had that box checked, make sure that check mark is removed, okay? Because this is an important control here to make sure that we don't have vendors sending us invoices before we receive goods. Everybody clear on the logic behind that too, by the way? The critical point here is not to say this box is checked. Moving a check mark in a box, that's easy. I expect my nieces could do that. Actually, my nieces can do a lot more. They're much older than they used to be. But I expect anybody could do that. The key here is to understand, why do we want to make sure this box is unchecked? And the answer is we don't want to receive invoices without receiving the goods first. All right, let's go ahead and let's create our first purchase order. We're going to create a purchase order today. That's all that we're going to be doing today. We're going to be creating our first purchase order, but we're going to walk this step. So go to transactions, purchases, enter purchase orders.
We didn't do anything on this last page.
We did not make any changes. All this was me spending 5 minutes talking to you about why that box should be unchecked. And if that box is checked, it's a disaster.
Okay, heard.
The good news is we've managed to avoid disaster. All of us together, we avoided the iceberg hitting the Titanic. Yeah. Okay, so we should be on our purchase order screen. We're going to be on our purchase order screen. Now, one thing you're interested to note is that it has a PO number that's to be generated. This is an automatic generation of purchase order system, which is an interesting control. Most of our documents that we're going to be looking at, in fact, I think all the documents we're going to be looking at follow a sequential invoice or sequential document ordering system. So what we're going to be looking at, this purchase order I believe that we're going to create is going to be purchase order 118. So what does that mean about the purchase order if we've created a second purchase order out of that? What would you expect the purchase order to be? 119, okay? Is that a form of a control? And the answer is yes. We make sure that a transaction that occurred previously has a lower PO number than the one occurs subsequently. We can watch the sequential process of those transactions. If it doesn't follow a sequential process, then that raises our alarm and say, I don't understand why the sequential process does not work. So this automatic assignment of a sequential invoice number is an interesting control that we have in place here. So we should actually make sure that we note that. But we'll see that here in just a second. Here's what we're going to do. We're going to leave our form as purchase order, so we don't need to actually change anything over here. But we are going to put our vendor name here. What was our vendor name again? Planning Partners. So go ahead and type in plan, P-L-A-N. Once Planning Partners has been entered, it should enter some other information immediately. So subsidiary United States West should update. Should actually have currency of US dollar, exchange rate of 1. We also need to specify a location, or we're going to specify US 1. All right. Couple other notes that we need to make sure. So like I've already talked about the purchase order number, we want to make sure this date is correct. It should be today's date, which would make sense because we're creating on today's date. So it should default to that. If it doesn't default to that, correct that. We're actually going to specify here in something in just a second. Actually, I'm going to do it right now. So let's go ahead. Let's go ahead and create our receive by. And I would like you to make the receive by 3/26/25. You can actually use the calendar tool if you'd like to. You do the same thing. So you'll notice that's exactly a week from today. Does anybody want to know why it's a week from today? Is it because our terms are received within 1 week? No, it's because we're going to be working on the second part of this assignment a week from today. So we're actually going to receive our items in a week. So that's why we're actually specifying that date. But we want to make sure we know what the date we're going to receive by is. All right. Next step, let's go ahead and specify what items we're going to be ordering. So very first thing, we can actually enter down here in this expense or this purchase order, we can enter expense items for items that have already been occurred. Like if we're talking about a meal, like somebody actually had a meal and was trying to get reimbursed for the expense, we can enter that here. But we're not going to do that. We're trying to order actual physical items for resale. So go ahead and here where you notice should have expense folders right here. I'd like you to move over to where it says items and click on that. Now, it seems like such a small little thing. I will tell you right now, this is something that did not exist in the earlier versions of NetSuite. When I was trying to adapt my tools, try to make sure I got the new procedures down, I missed that one problem, and it took me like an hour to figure out what it was. So if you do not click from expense to item, if you do not click on the items number, you can't actually do the next steps of this. So again, all these little small details matter, but they matter a lot, okay? Even though it seems like I'm just kind of highlighting them. So we should be at items. And the good news is you have an item here that you're going to sell. Now remember, whatever your item was named, if you did what I did, it's going to be I, and then immediately does the I Love AIS textbook. So we can click on that, and I'm going to tab over that. And as I tab over, it immediately fills in the description that I gave it. It should have the price that you actually entered for the purchase price of $14.99. We're going to sell more than one of these, so go ahead and click on quantity and type in 30. That should get you an amount of $449.70, which is just $14.99 times 30. Buying those textbooks, and sell them out. That's actually a pretty good deal for $15 for a textbook right there. Must be a low quality textbook, but yeah, I don't know. Or no, better yet, the person who wrote that textbook is the Memoirs of a Truman State Student. They were like, you know, Dr. Barnes always complains about the price of textbooks. I'm going to write a textbook for Dr. Barnes' class that the students can actually afford and they can get a lot of value. So thank you very much for doing that, by the way. If anybody wants to do that in the future, I will look forward to that opportunity. All right. Because I do think the textbooks are too expensive. We actually used a much lower price textbook previous to this course, and you get what you pay for, unfortunately. So that's unfortunately why we use the textbook we're using right now. But this is not relevant to discussion. I'm going to move on. All right. So we've got our items here. We've got our item in. Let's go ahead and click on add. All right, let's check a few things. And we're going to make one adjustment. So I want you to click on the shipping tab up here. It's going to specify where it's going to be shipped to. All you need to do is just check and make sure this has warehouse manager, your company name, and your address. This is what we set up in our first day of classes. And it should still be consistent in there. If it does not have that information in there, then you may have to make an edit to that. But it should be consistent, should be set up. And then just for giggles, let's go to billing, okay? First of all, I love this address name, 1421 Wiffle Ball Drive. I have to assume that it's someplace in the world that there has to be a Wiffle Ball Drive, okay? But let's go ahead and change the terms to 110 net 30. And the reason we're going to do that is we're actually going to track this next week, and we're going to see, does this track within the system? Does it actually track the discount if we're within the term date? And the answer will be yes. We're going to pay next week, and because we're paying within 10 days, it's going to give us that 1% discount. So we need to keep that in mind. All right. Once you've done that, okay, just a reference, got our items listed here, our AIS textbook, you can add it on here, has to be added, otherwise it will not recognize. Got our shipping to our warehouse, got our billing is 110 net 30. Once you've got all that done, click on save. We have one more step left, and we're going through the step. I do want you to make sure you're very clear on what's going to happen here, because if you don't follow the instructions as specifically as I tell you right now, it will mean the difference between you getting 0 points and 5 points on this assignment, okay? So our final step, and this is actually your deliverable for today's assignment, is to print out the purchase order that you just created, okay? Now, printing out is actually pretty easy. You will notice if we highlight over this little printer icon, and by the way, you should have gone immediately to purchase order. If you did not go to purchase order, if you went somewhere else for some reason, you can always get back to this purchase order by going to recent records on the home screen, not home screen, and then going to that. So we can actually go here, and we're going to print out this purchase order. Now, when I say print out, we're not going to actually be printing out here from the printer. We're going to actually be saving it as a file, but this is where the key comes in. So go ahead and click on print. It should open a new window. Now, I do want to clarify something. This always comes up, and I'm still not exactly sure. I've been trying to figure it out. It should say Sweet Success Financial Company, which is not an address that we entered. That's a default address that I've not been able to figure out where it's actually at. I should probably be able to figure it out, but you should have vendor and your company name as the ship to. So you can ignore this right here. The only thing that we need to worry about is that these are correct, okay? Now, what's important here? This is really, really critical. You will notice the file that it's created is a .nl file. This is a NetSuite proprietary file. If you save this file as a .nl file and upload this to Brightspace, Brightspace will not be able to actually display the file. What's more is that when my GTRA tries to open it to make sure that you did the work properly, it will not be able to, because this is a proprietary file that's only open through NetSuite. So we want to save this as a PDF file, and you're going to hear me say this 3 more times over the next 4 weeks, okay? What is it that we need to do? Very first thing is we're going to go over to this printer icon, and we're going to click on print. And it's going to open a copy of our purchase order, and you'll notice where it says destination, there are multiple options. I encourage you to say Microsoft Print to PDF. That is the most effective one that I've had. So once you do that, it will print, and it will ask you to save the file name as a PDF file. And as you can see here, I've saved a whole bunch of these as PDF files. Once you save it as a PDF file, that is what you are allowed to upload to Brightspace as your deliverable. So just to reiterate, if you submit the .nl file, that is 0 points for this assignment. If you submit it as a PDF file, that is 5 points for the assignment, which I realize 5 points may not sound like a material amount, but why take the risk, okay? So please make sure you save it as a purchase order file and upload that to Brightspace. And once you've done that, you have finished the assignment for today. Are there any questions before I move on? We still have homework to cover, but I want to make sure that I don't abandon anybody before we get to that last step. All right. As always, this is being recorded and it's going to go to YouTube. So if you had any questions or missed a step and need to follow up on it, you can always just pick that back up on the YouTube and see where we're at. We will conclude our purchasing process next week. As I said, we've still got multiple steps to walk through. We've got to receive our order. We've got to receive our invoice. We've got to pay for our order. So these are all steps that we will finish up next week. Let's go ahead and talk about what we've got left today. We got some homework. All right. So big data is often described by 4 V's. What is it described by in this class? 5 V's, okay? So 5 V's. But in the book, it actually only has 4 V's. Which are the 4 V's that are listed out? So volume, velocity, veracity, and variety. Which one are we missing, by the way? Value, okay? Value we said was really important. Value is also listed there. So make sure we have to know that. So keep in mind, all of these are high, including value, with the exception of veracity. Veracity is just another word for accuracy. What do we know about the accuracy of big data? It is low accuracy of big data. That basically means that it's not consistent, that you're going to get all different types of data that you're going to be looking for within big data. Not all of it's going to be accurate. In fact, the majority of it will be inaccurate. Important to note. Question number 2. According to estimates considered in the chapter, what percentage of data analysts' time is spent cleaning or scrubbing the data you have for analysis? That's going to be like 0 to 20%, right? So just minimal amount. We don't have to worry about it. Boy, wouldn't that be nice? Up to what percent? It's 50 to 90% of the time. which again, I know that puts a damper on the idea. If you wanted to become a data analyst, you're just kind of like, I can't wait to ask all these questions. Well, the bad news is only about 10 to 50% of your time is going to be spent asking questions, depending on the data set. The rest of it's going to be preparing the data for analysis, which if you enjoy that, could be cool. All right. In the acronym ETL, the process of running data for use in data analysis refers to 3 words. We want to make sure we extract the data, we transform it for use, and then load it for analysis. Extract, transform, and load. ETL 3 or C there. All right. Which term is used to describe the science of examining raw data, removing excess noise from the data set, and organizing the data with the purpose of drawing conclusions for decision making? This one's an easy one because all you had to do is go and look in the slides and look for this definition in the slides because it was verbatim, word for word from the slides. That was how we described data analytics. Data analytics, how we actually describe that. All right. ADS is a standard format for files and fields typically need to support an external audit given the financial business process here is developed by ACCT. Acronym ADS stands for what 3 words? So remember, I talked about this. I said, would you rather receive a file in Excel or a PDF file? And most everybody in this room kind of agreed that we wanted to receive an Excel file, right? Because trying to analyze and import and clean a PDF file is a nightmare, particularly if you don't have a tool that's custom made for that. So one of the things that we used to do in data analysis when I worked in that is we actually set a series of standards and said, these are the file types that we will accept. Please export according to these file types. That was called audit data standards. Now the question is, are audit data standards exclusive to external audit? They are intended for use in external audit, but they can be applied to other environments as well. So when we talk about audit data standards, they are intended for use for external audit, but they can be applicable to other areas. This is just a general area of audit standards that we're actually going to be used for data analysis, but a really important one to note. All right, getting into our different types of analysis. We have 4 types of analysis that we're going to be talking about. The question number 6 is what question does prescriptive analysis address? Let's just go through these quickly. That way we actually make sure we have these set up for the rest of the questions, okay? Our first one is descriptive analysis. Descriptive analysis asks the question, what happened, okay? Then we move on to diagnostic analysis. Diagnostic analysis is we know what happened. Let's answer the question, why did it happen? Okay. Then we have predictive analysis. Predictive analysis is basically saying what will happen. Then prescriptive analysis is the most complex of these. This is the one we're having here. Prescriptive analysis says based on what we think will happen, what should we do? All right. So what should we do based on what we expect will happen? Is B is the closest to that. So B is our answer here. Then we have descriptive analysis in question 7. We just talked about that. Remember, descriptive analysis, the easiest one of these. That's just saying what happened. This is A. Then question number 8. Which analysis addresses the question of why did it happen? Don't you like it when those questions flip on you? You're just all in the pattern of saying, okay, I know what diagnostic analysis is, I know what prescriptive analysis is, and they flip it on you and say, okay, now you got to answer the other side of the question. So why did it happen? That's actually our diagnostic analysis. Diagnostic analysis, okay. What type of analysis addressed the question of whether a customer will ultimately pay if credit is granted? Okay, so this is an interesting question, okay? What is this question is this ultimately asking? Is it asking what happened? No, it's not asking what happened, okay? It's asking why did something happen? No. This is looking towards the future, saying what we think will happen. So is this asking a question of what will happen? Yes, okay. So if it's asking a question of what will happen, what type of analysis is that? That's predictive analysis. This is a predictive analysis question. So I really like this question. This is the type of question you could expect to see on the exam where you have to say, not only do you have to know what the types of analysis are, but given a certain scenario, you have to know what type of question is being asked. And this is a pretty interesting one. Will the customer pay if credit is granted? What will happen if credit is granted? That we're asking. So predictive analysis. All right, question 10. If we want to know what grade we need on the final based on our expected performance in the final, we would call that, this is another interesting question, okay? So is this looking at past information? To some degree it is, but it's not asking what happened or why did something happen. It's looking towards the future, okay? So is this asking the question, what will happen? The answer is not exactly. It's saying, what should I do based on what I think will happen? So I think that I'm going to have this amount of points at the end of the semester. What do I need to score on the final to get my desired grade? So what should I do based on what will happen? This is a prescriptive analysis, All right, moving on to our problems. I couldn't resist. I saw some of these questions right here and I thought this is kind of fun. Let's just do this. Because you can't all just be drawing out UML diagrams. So I gave you a break from some diagrams. I said no more UML diagrams, and I'm going to hold to that. Unless you're taking the final exam, no promises there. All right. So each of these are going to be either mastering the data, which is basically ETL, cleaning the data, data cleaning and validation, or performing the analysis. And so you have to specify which. So let's just go ahead and go through each of these. Removing extraneous data and noise. Is this going to be mastering the data or performing analysis? Yeah, this is definitely sounds like a cleaning step in the data, which is going to be ETL, so it's mastering. Looking for trends in the data might predict new sales opportunities. Is this something we do as mastering or performing analysis? Performing analysis, good, okay. Finding necessary data from financial reporting system to give the external auditor for analysis. This is kind of an interesting one, okay. Is this analysis itself, or is this a step we would do before analysis? Sounds like a step we do before the analysis to make it part of mastering the data. This one's not nearly as obvious, but think about it, we're trying to identify the data before we actually perform analysis. Performing tests of internal controls by the external auditor, okay? Again, those of you who are accounting majors get to look forward to this in a few semesters, if not next semester. What are we talking about here? This is definitely a performing of analysis step. This is where we're actually doing something with the data. Considering Champaign, Illinois weather patterns to predict corn production in the immediate areas. Anybody from the Champaign area? Okay. There's a lot of corn there, just out of curiosity. I know that generally in Illinois, there's a lot of corn. Yeah, same that all Midwest regions, there's a lot of corn in that area. But all right, so are we doing some sort of analysis with this? Yes, this would actually be performing the analysis. So good. Consolidating a large volume of data from multiple sources of platforms. Okay, so don't be misled by this one. This sure sounds like we're doing performing analysis, but this is preparing data so we can eventually perform the analysis on the aggregate information. So this would be a mastering step. This would be mastering the data. All right. Which of the 4 V's are used to describe big data? So we got volume, velocity, variety, and veracity. Of course, we're missing value, but you don't want to miss value on the exam because it will definitely be there. So let's go ahead and work through each of these. Unstructured and unprocessed data such as comments in social media, emails, global messaging system measurements. What does that sound like? What do we think? That sure sounds like variety to me. Is everybody on good with variety? Okay. Massive amounts of streaming data involved. That's volume. Yeah, it's a big volume step. Data incoming fast speeds in real time, such as streaming videos or feeds. We talk about fast speeds. Sure sounds like velocity. Yeah. Opinions or facts. Correct. Yes. Remember, not everything is going to be accurate. Okay. Opinions. Everybody's got them, and they all stink. Okay. I'm not going to repeat the first part of that comment, but yeah. Anyway, yeah. We talked about veracity when we talk about opinions or facts. Data with a lot of misleading observations. Oh, okay. So if it's misleading, means there's inconsistent. It's not going to be accurate. Lack of accuracy implies a lack of veracity, low veracity. Okay. Stock market data that updates every 5 seconds. Wow, 5 seconds is really quick. If we're talking about something being quick, that's going to be velocity. All right. Financial statement data that appears in tables. Yeah, I think variety is probably the best one that we could actually use there. The variety of data and appears in tables. And then all Twitter data from 2021. So how much Twitter data has there been? It's like Twitter, it's not nearly as much as there used to be, actually. I guess we call it X now. There's not nearly as much activity on X as there used to be, but there's still quite a bit of a daily activity. We can say that's a high volume of data. All right. And then last question. So we've got some matching of terminology here. So we need to actually identify what terms are being used in this situation. So we got audit data standards, big data, descriptive analysis, diagnostic analysis, AMPS master the data, AMPS show the story. So a standard format for data files and fields typically need to support an external audit. We just talked about that. It's not used exclusively for external audit, but it's standards that were devised to support external audits. What do we call that again? ADS, audit data standards. Data sets are too large and complex for business existing systems to handle using their traditional capabilities to capture, store, manage, and analyze these data sets. Looks like probably a big data set, which means it's probably big data. All right. The process of cleaning and scrubbing data before analysis can take place. We just talked about that. Okay, that's the ETL process in the AMPS model. That is AM, master the data, and master the data. By the way, remember AMPS stands for 4 letters. So A is ask the question, M is master the data, P is perform the analysis, S is share the story. Okay. Process of determining how separation of duties was violated at the company. Well, that's an interesting one. Okay. So separation of duties of violated company, we call it segregation of duties, but so we're trying to determine something happened We want to know why did it happen? That's what this question is asking right here. What type of analysis asks the question, why did something happen? The diagnostic analysis, that's what we're doing there. Okay. Process of summarizing accounts receivable by how long it's been outstanding. Okay. So this one's basically saying what happened. This is a little bit easier. What do we call that? Descriptive analysis. And then delivering the findings to decision makers with firms or companies should approve for credit. So we're going to be delivering findings to decision makers. We're going to provide information so people can make provide detail so people can make decisions. That's actually what we're going to be doing next week as part of chapter 11. That's sharing the story. It's sharing the story. All right, we are done for today. We'll be back on Friday for Excel and AI stuff. See you all then.